Right, everybody, thanks again for coming in for another one of our Publics at IIHS series. Today we have with us Dr. Sudeshna Mitra. She's faculty here at IIHS. She works in the area of land economy, land administration, and urban and regional planning. I knew I was going to mess that up. She has a PhD from Cornell. She has taught at several places, including SPA and Cornell. And I'll hand it over to her to continue.
Working? It's working, huh? Yeah. Okay. So, thanks for coming. Good evening. So, the work that I'm presenting today is actually part of research that I did in Kolkata and Hyderabad, looking at the kind of land economy transitions that were happening specifically in the peripheries of the two cities. The time period that I'll be mostly focusing on is this period between sort of the mid to late 1990s, going all the way up till 2008, 2009, when there was the financial crisis. And although we didn't actually see significant impacts of that crisis, but there were certain dynamics that played out, particularly in the cities. So that's roughly the time period that this research will be looking at. There has been a lot written already, which is about that 1991, even though it was the year when liberalization policies came into effect. However, in many ways, it's not really an economic tipping point, because a lot of the reforms, the economic reforms, had already started in the 1980s. However, in this research, I'm going to make the argument that nonetheless, that early part of the 1990s is something of a watershed moment, not just because of the economic changes that happened, but also because of the particular political moment. So if you recall, the period between 1989 to 1998 was a time when no single political party could get a clear majority in the national elections. So it was also a time when a lot of regional political parties became part of political coalitions at the national level, and which played into this whole question of state rescaling, but from a very political, it sort of gave a political agency and motivation to a lot of regional parties that were forming at the time. So I will go into that a little bit more further on in the presentation. But nonetheless, it was also a moment where there was an increased level of decentralization of fiscal responsibilities from the national to the state government levels. So that is particularly, I think, important in terms of what happened in these two cities. Scaling it back to another level, like beyond the state government level, is that within the state also, in a lot of states, there wasn't often a comprehensively organized or comprehensively imagined state level urban and economic agenda, which essentially meant that the state capitals often became the default locations for what the state government was trying to do at a state level. And so both Kolkata and Hyderabad stories are very interesting from that perspective, because in many ways it was the state economic agenda which played out at a city scale. So that's again sort of another aspect of the rescaling that we sort of see at this time. So a lot of these projects ended up as very specific placemaking, placemaking efforts by the state governments, which were in some ways focused in the periphery areas of larger cities, again because land was very central to this placemaking activities, and we'll talk about that as I go forward a little bit more. But it's, I mean, that's why the periphery is a very interesting place to sort of look at this project of state rescaling and placemaking that happened. A lot of it was with this new discourse that started about attracting, how do you attract and how do you accommodate investors. And even though there was a lot of talk about global referencing, the world-class cities, etc. I mean, that is the time period really where all of these discourses and narratives started. We've normalized a lot of that now. I mean, there are investor meets in every state. Bangalore recently had an investor meet. They're huge, the carnival-like, etc. But this was really the moment when that started. And however, it is also interesting to sort of see from these two cities, the experiences of these cities, that even though there was a lot of talk about global, when it came down to it, a lot of the placemaking was really looking at local investors, right? So local and external investors, external also in the sense that they were domestic investors. So that's another thing that, you know, where there's this talk at a global level, but really these kind of strategies that are playing out at much more local and regional scales. Another thing that was interesting for me going in is, like I said, that I was interested in looking at the state government's role, like when early 90s investment interest from outside really did start coming in to whatever extent. There was certain destinations, certain cities that were already sort of seen as investment destinations, and I'm talking about Bombay and Delhi and even Bangalore. However, Kolkata and Hyderabad were really not on that map anywhere. And it was the state governments that put together a very conscious project of pushing this agenda of how do you make these cities investment destinations. And that really was something that I was very interested in, because it also sort of speaks to when we talk about like world-class cities or world cities around the world, there are only certain cities that really fit that agenda, that fit that terminology, however uncomfortably. And then there are all the other cities that are trying to be world cities. So in a local, in a more domestic sort of a way, it was that same dynamic that I was interested in sort of looking at. And therefore, at least the explicit political ideologies that the two state governments espoused, you know, the CPIM government in West Bengal, one of the, you know, it was the longest running communist government in power in the country at the time, compared to the Telugu Desam Party in United Andhra Pradesh, which Naidu, when he first came in, had a very pro-market stance. He used to say, he was called the laptop carrying CM, and preferred, he was quoted as saying that I would prefer to be called the CEO of the state rather than the CM of the state. And so I was kind of interested in sort of seeing that at least explicitly there is sort of this discourse which talks about these very different kinds of ideologies, and does it really play out at the city scale in terms of these placemaking efforts? Do these ideologies translate to different approaches? So that's a brief sort of a background. These are sort of the pictures from the two locations. High-tech city, Cyberabad area in Hyderabad, the IBM building which DLF built in Newtown, Kolkata, which were both very sort of emblematic about the kind of changes that were happening. So at this point, I just want to sort of make a quick sort of a comment about sort of my more methodological and theoretical considerations in going into this, because in both cities, the kind of things that happened were most certainly did not fit the conventional practices of what we expect happens as a part of a planning process or how policy is made. Nonetheless, there is also a lot written that says that if it doesn't follow a planning process, if it doesn't follow a policy process, then what's happening is really too chaotic to even understand, right? So it's about neoliberalism, it's about spatial exception, it's about you know, various kinds of these larger discourses that come into play. And I'm not necessarily saying that they're not true and that they're not relevant to what was happening in these two cities. However, I'm also sort of saying that there were within that layer of sort of, within that larger layer of how these terminologies are used and what they're used for, there were also like several the smaller dynamics that were involved, which actually make it like, if you follow their rationale, it makes perfect sense. It's not that it is unknowable, it's not irrational. None of those decisions that various actors and agents were taking it's an unknowable. The periphery is not chaotic. The periphery is knowable, except that a lot of the lenses that we use to understand that are sort of planning and policy lenses which have certain assumptions about how power is structured between state, society, and market. And really sort of the entry point for this research was that firstly looking at state, society and market in disaggregate terms, that there are several structures inside any of these larger categories, and then there are negotiated power compromises that are happening between how state is responding to market, is responding to society, and it is sort of an excavation of those negotiated power compromises that make the periphery knowable. So that's like, just I wanted to like, and we can talk about it more as we go forward as I reveal some of the details of what that means. Very briefly, this is what the peripheries of the two cities really looked like. This is Hyderabad. Perhaps some of you are already familiar with this, so I will do this thing. The grayish circle in the center is really the developed area of the city. The red circle is the new IT city that was developed, which is Hyderabad. And the pink line is the outer ring road, which really connects the new international airport, Shamshabad, to the south of the city. There is the Cyberabad, there is the Genome Valley towards the north, there is there is Gachibowli on this side, there is Raheja mine space on that side, and approximately across this entire sort of this thing, there are about 35 to 40 special economic zones that were designated along the thing. So even though the outer ring road actually came after, it came post Naidu's tenure. However, the spatial format of what this development looked like in the peripheries was already set. So the ORR actually really followed that format, the spatial format that was already emerging. And this is a massive change, because from 2,210 square kilometers, it went up to like 7,100 square kilometers, which is an increase of 3.2 times. About 2.5 times the city's area was really added in the peripheries as a part of these changes. So that's a huge sort of change. But of course, this was a change which meant that a lot of the land that was intervening between the already developed areas and some of the areas that were coming up around the outer ring road were actually not developed. And so it actually opened up a whole new real estate market, whole new sets of transactions between new agents who wanted to be part of this project, which was being very explicitly championed by the state government and Naidu himself. The other interesting thing is that the kind of spatial form that's coming out, it at least theoretically allows a frame where you can enter the city from the international airport. If you have business only in the IT city or in one of the special economic zones or of the biotechnology zone, then it is possible to simply go there and return, leave the city without actually interacting with the main city. So there is a whole new logic of transportation that is set up. And also, like most of these spaces that were created were special in some way. So the airport is a special economic zone. The outer ring road is a high speed, exclusive, limited access transport corridor. The IT city has, the Cyberabad area has its own police, a new police, metropolitan police center was set up there. Each of these special economic zones are spatially segregated in their way. So it's also this sort of a new form of spatial exclusions which are sort of built into this new format that's emerging. The story is similar in case of Kolkata. This map right here, so airport is up there, and most of the new townships that are coming up are on the periphery of the main city. Most of them are connected to the airport through these new transport corridors. I'm going to be speaking mostly about Sector 5, Newtown and Rajarhat, sort of these subsequent developments that happened in this area. So I'll be focusing on that, but if you see, some of these other townships that also came up had the same sort of a spatial logic. And of course, the scale of the things is a lot smaller than what happened in Hyderabad. This is kind of the size of some of the new townships that was coming up. But this is like a larger map of this area, And I'm going to talk a little bit more, but I just want to point one thing to you, just sort of keep that as thing, that this entire blue area, if you see with a very clear boundary line there, is called the East Kolkata wetlands. And for those of you who here are, have background in geology and hydrology, this whole thing kind of actually goes to the bay. So drawing a very clear boundary that separates what is a wetland and what's not a wetland is actually not possible. Like, you can't draw a line like that. But we'll talk about this more. But that's part of that demarcation process that happened. So today I'm actually going to focus on two aspects of this research. One is the political context that I talked about, that there was obviously an economic decentralization of fiscal responsibilities that happened from the national to the state levels. However, it got a particular kind of political motivation and agency because of the political story that was happening at the same time. So I'm going to spend a little bit of time on that political context, because it also sort of highlights that these are not dynamics that are coming externally. These are not discourses that are coming from elsewhere. What happened in both the cities was very, very closely linked to the economic and social histories of both the cities, and that framed the path that both the cities took. And that is very much linked to this idea of the economic and political regionalism that happened. The second thing that I'm going to spend time on is the idea of land value, but not just land value in its sort of financial interpretation, but also land value in terms of how it was created and also how it was articulated. So people talked about land value in particular ways, which partly were financial, but part of it was part of a discourse. So seeing those different narratives of how land value was created and articulated play into, again, basically it highlights that this is a terrain which is being built. There's competition, there's conflict, there's collaboration, there are new circuits of discussions that are happening between new agents that have gotten more agency as this terrain develops. So I'm going to take a look, I'm going to talk about that in more detail in the second part. So starting with the idea of economic and political regionalism, like I said, a lot of these modalities have been normalized now. However, this was the beginning of it, and these are some of just the pictures from that time. Naidu, of course, was in many ways a pioneer of sort of changing the discourse and the actions that a state government could take in these circumstances. When he came into power, I'm just going to grab notes from this. When he came into power in after basically the coup against N.T. Ramarao, he did not have legitimacy either inside the party or was not more generally known to an external audience. But from that perspective, he very quickly shot into both economic and political attention, and very quickly he had people like Bill Clinton, Bill Gates, Tony Blair, they all visited him, not just at the national level. At that point, like, these kinds of interactions that were happening at the national level. However, this was the first case in which these people came and directly met Naidu at in Hyderabad. So this was an absolute shift in those kinds of the kind of power or the kind of discussions that were happening at the state level. He was quoted as being South Asian of the Year. He became part of the ideal politicians from around the world, which the World Economic Forum came up with. So very quickly he sort of went from somebody that no one knew to someone that everybody internationally was recognizing. The other thing is that what Naidu did in Hyderabad, and by extension United Andhra Pradesh, in many ways then became the benchmark of what good governance was about in this new regime, which became in some ways what other states and other chief ministers learned from and then normalized as a part of their thing. So this is the other story, where what we kind of define as, say, neoliberalism in a larger frame is also a mutually constitutive path, which is not just being constituted at a local level, but it's also that different cities in their parts are putting, various benchmarks, modalities, practices in place, which then is being followed by a whole set of other states and CMs that are in the same way. Calcutta was also constituted a lot of the discourse in its turn. For example, when Nandigram happened and Singur happened, and the whole issue of land acquisition became like this big thing. I mean, West Bengal was one of the major sites for where that happened. That then translated to how other states were reacting to the question of land acquisition as well. I mean, I'm not saying it was the only one. There were many states in that process. But again, so this is a mutually constitutive process of what is an accepted or normalized way of attracting investors, etc. So this is Buddhadev and Singapore in an investor meet. So, sort of going back to what I said, that period between 1989 to 1998 was very useful and important to think about, because a lot of regional political parties were coming into power. It was kind of the end of the Congress having a role both in the national politics and at state level politics. So regional political parties were establishing what a regional agenda is, what is regional identity, how do you establish that, how do you build a political constituency. And suddenly in this time period between 89 and 98, they could actually play a part in political coalitions which had national significance. And so this is state rescaling in a very different way from, like, say, what Brenner talks about. Because this is about regional political parties not just changing their character because there is, state rescaling and things are moving down to a more decentralized level, but it's also a constitution of power because they are playing a role in national politics. And that translated into what their agency were, what their motivations were when they came back into their states and established their new economic and political agendas. So when we talk about regional competitiveness in economic literature, it seems like a very sort of optimal, rational sort of a world. But this political underlayer that happened in India makes it actually a highly negotiated terrain. It is not this sort of, this clean and clear, sanitized thing that we read in economic textbooks. Like I said, Naidu pioneered the subnational direct interface with international lending agencies and investors, kind of set the path in that. The other aspect of this was that because of this decentralization and because the decentralization was so clearly sort of set up in terms of fiscal responsibilities, land became very central to how state governments were talking about creating new partnerships with private partners. So land was key to that, and I'll sort of go into some of the modalities that land took, but it also is an embedding of real estate logics into state strategies in a way that has now been normalized, but really this is the kind of time period in which that shift politically happens. I'm not going to talk about this part at all. This is another part of my research, but IT sector and knowledge economy in their own way played a very important role in this sort of shift that happened, because not just in terms of the economic and financial returns that were coming from the sector itself, but as a larger discourse of what market reforms were about. And market reforms for IT sector and knowledge economy sectors are very specific. Market reforms for other productive, other sectors of production are very different. However, when you see the linkages that happened in terms of the reform policies, you can see that a lot of things translated from the way that reforms were imagined for the IT sector, translated to other sectors where it didn't necessarily fit that well. But anyway, that I'm not really going, but I just wanted to sort of highlight that a little bit. Okay, so in this context, basically the point that I'm trying to make out of all of this thing, that economic and political regionalism, is that narrative discourses actually become really important to think about and consider, because this really kind of goes beyond any consideration of whether economic optimality or even the question of political constituency and like being safe in the elections. Actually, both state governments in this period, at the end of this period, lost their state elections, in part because of all of the things that were happening. So it really kind of goes beyond this idea of economic rationality or even political rationality, and it has to be, we need to sort of understand what was going on in terms of that a lot of these aspirations and discourses were very future specific. It was about urban imaginations, urban futures, which was going to happen, and the state strategies were geared towards how do you operationalize those futures in the present time. Some of them materialized, some of them did not materialize, but it is this process, and so you can do a test of optimality if the results are in your hand. But when the result is yet to come, then it starts to become much more a terrain of discourses. So that's kind of another aspect of sort of why a lot of these things are that, okay, it's just certain elite groups capturing the process, but it's really a lot more nuanced beyond that. It's about the various urban futures, who collaborated, who conflicted in those ideas of the urban futures. So business lobbies, of course, played a huge role in setting up those discourses, and a lot of the state strategies, the competitiveness of those strategies also reflect the influence of a lot of those more vocal interest groups that emerged during that time. I mean, just to give a quick example, Shamshabad Airport was in direct competition to Bangalore International Airport. The ORR was in direct competition. I mean, every single large infrastructure project was referenced with something that was going on in Bangalore. Shamshabad Airport, who's going to actually come, what's the traffic, because airports don't actually make money from passenger traffic. They make money because they become the regional hubs for airlines, and airlines rent space for their aircrafts, for their back offices, and that's really where the money comes in. So pushing Shamshabad Airport forward, it was a very clear strategy of how Hyderabad needs to be the regional hub for airlines rather than Bangalore. So there was a lot of sort of back competitiveness around not just the spatial element of the airport itself, but the business model of what the airport was going to be. I've already talked about that. Okay, so this is a simplification of basically what happened in both the cities, but like a quick reference. The two cities had, like I said, that their local economic and social histories were very different. Their ideologies were very different, so the approaches are also very different in some ways. Hyderabad, Naidu, wanted to create a big splash, wanted to create a huge sort of a brand recall for Hyderabad as a destination. Very aggressive marketing. There are all these colloquial stories of how he would go sit outside the offices of major corporates and not move until they gave him an interview. He was successful in bringing Microsoft over. Microsoft actually has its first offshore facility anywhere in the world. The first one was in Hyderabad. So he was incredibly successful in this aggressive marketing, and his focus was on iconic projects, iconic brand names, iconic corporates. And his idea was that he's going to work one-on-one with these names that would create brand recall for the destination. A lot of that negotiation was around land. For example, Microsoft wanted to have a campus that would be similar to Redmond in Seattle, and that negotiation with Microsoft on a one-to-one basis was a very significant reason why Microsoft came. So, and then the rest of the real estate market, he said that if I have these key, the early starters in place, the iconic brand names in place, the rest of the market is going to follow. So I don't need to go after small, medium scale investors. I just need to bring in the big names, both in terms of infrastructure and in terms of projects and corporates, etc. So that was sort of Naidu's strategy, whereas it was very different in West Bengal. West Bengal came into the story with a whole history of communist politics, a lot of unionism. Most of their agenda was really rural focused rather than urban. They did come up with industrial policies in the 80s, which really went nowhere. So at the time when liberalization sort of forced them that they have to take greater responsibility for fiscal outcomes at the state level, they had to basically rethink their relationship with business. and they could not bring in investors from outside the city because the dominant idea about the city was that it's anti-business, there's a lot of union politics, and it's not a good place for business. And so when they started, they really had to start with the people who had money, who had capital in the city itself at the time when they were doing the change. And because of Calcutta's history, because of deindustrialization that happened in the state, a lot of productive capital had actually exited the city. What capital remained was actually not with the Bengali communities. It was a lot of Marwari investments and investors who were in real estate, because that was one of the markets that in Calcutta survived despite the deindustrialization, despite the economic recession. And so when CPIM started sort of rebranding themselves, they made one-on-one public-private partnership firms with 13 of the local developers, who were already present in Calcutta. So Bengal Shrachi, all of those, like there are 13 of them that they created. And the first projects in which the private sector was involved was actually small housing projects, which were public-private partnerships between these developers and West Bengal government, in which West Bengal government gave the land and the private partner was the project manager, construction, responsible for construction. The projects were structured financially in terms of valuation of land being the equity contribution of the government and construction costs, etc., project management costs being the share of the private partner. Then this model, which actually in the first stages was probably one of the most progressive, in my opinion, one of the most progressive public-private partnership models that the country has seen. Then this was scaled up. So instead of small housing projects, these were then done over thousands of acres, the same public-private partnership models, and that's when the model started to fall apart, because those same modalities did not respond well to that kind of a scale-up. But in any case, the shift to the national and international developers that happened along the same public-private partnership models happened after these first 13 public-private partnerships that came up in Kolkata. And also as a consequence of that, the focus in Kolkata was on real estate developers. It really wasn't on corporates, it wasn't on investors. They wanted to get the money from anywhere that it would come. So real estate developers was, a primary sort of target market for them that let the developers come in. Even that IBM building that I showed you, it was really a project in which the West Bengal government was in negotiation with DLF. And then DLF built a building in which they got IBM in as a tenant. So this is like the histories of the two places, you can kind of see, really shaped the approaches that played out in the two places. I mean, this is where I'm sort of headed. Land was, of course, acquired, aggregated, leveraged in multiple ways, and it changed a lot of the use patterns that were already there in those areas in terms of waste, water, food, energy. This is what it looks like, and this was sort of the difference between the billboard and the actuality of what is happening. So both of these are sort of very iconic buildings. Technopolis in Kolkata, Newtown, just as you go into Newtown, high-tech city, of course, in Hyderabad. This is what made it to the billboards. This is what was used in the destination marketing. But the reality of it is that most of this land actually looked like this in both the places. There are few iconic buildings, and you can sort of see the buildings being part of the landscape, but really kind of spread out. But the changes that really happened was that a lot of land was acquired and aggregated beyond what appeared in terms of these billboards and the marketing. So this is sort of a schematic of the kind of role that land played in public-private partnerships across the two cities. So the first is, of course, that the government played a role in simply providing access to aggregated land to private players, which, of course, in the Indian context is very significant because we have, like, despite all the politics on Land Acquisition Act, etc., there is, that's still a story that's playing out. There are questions of land ceiling, there are questions of tenure rights. It's very difficult for a private sector player to sort of go in and aggregate land. And at least in the time period that I'm talking about, the state played that role of being the aggregator. The second aspect of it, again, is a very simple financial sort of a thing where, as I explained in the public-private partnerships that first emerged in Kolkata, the 13, this thing, that land is simply a project cost subsidy. If the government underwrites the land component of the project, then only the construction and management costs is what the private partner has to pay for. I mean, in a sense, has to recover from the market. So that's an immediate sort of subsidy that plays out, and even taking a conservative estimate of 30 to 40% of the land cost. And these are numbers, again, from that time period that I'm talking about. The other aspect of it is what their land worked as an infrastructure cross subsidy. So for example, the Shamshabad airport was given to the GMR group with 5,000 acres of land along with the airport. 5,000 acres of land which could be developed in various sorts of real estate propositions, sold, rent could be extracted, and the real estate and land rents could then cross-subsidize the infrastructure component of what was coming up. So it also worked as an infrastructure subsidy in that sense. And this has an interesting history because around the Shamshabad area, a new development authority was created, which was called HADA, Hyderabad Airport Development Authority. And the GMR group was actually part of HADA, was on the board. And the thinking was that competitive developments that would come up in the area could be screened because GMR would have first options in sort of talking to investors and bringing in those developments within the airport area rather than the HADA area. The other thing is the debt leverage thing. We've all heard about what has now become the non-performing assets story, the NPA story, but this is really also the time when this story was unfolding, where land was used as a collateral for debt financing. And of course, the default rates, as they started going up, that window started closing. And therefore, it wasn't actually possible to simply take out, go for institutional financing for a lot of large infrastructure or real estate projects. And that's when this whole idea of equity leverage starts to come in, which is basically private equity, whether they're domestic, and a lot of them are domestic, which, they become partners in the project and they become, the share. The same thing that was happening in this case with the government is now what's happening with private partners through equity leverage. And finally, this aspect of it, which has increasingly, now it's talked about a lot more. At that time, it wasn't, and came out of interviews with various real estate developers, the larger ones in the country, where they said that a lot of the investment interest is really coming out in terms of portfolio interest, where land is one of those assets which doesn't lose value over time. So investors who are looking at risky ventures as well will build a portfolio which includes their risky investments, but they'll also have land. And land is really a hedge for the risks that they're taking in other sectors. Because even if they don't develop that land, but they have that sunk in, it's a part of their portfolio, they're not going to lose all their money. So it is also part of a larger portfolio strategy, which immediately starts to explain why a lot of land is aggregated but never developed, especially in these areas, because it doesn't need to. As long as the rate of return that you will get from selling the land is higher than your inflation rate, you can just keep land fallow, you will still make money, right? So that sort of pays for itself. So in terms of, this was another aspect of strategies that started coming out. Now to look at sort of the state side of what was going on, eminent domain, of course, played different kinds of roles in the two cities. In Kolkata, it was used extensively. The state used it extensively, again comes out of its own history of it. Hyderabad, it was very limited, only some. It was mostly sort of specific negotiations with particular partners. And I gave you the example of Microsoft, for instance, where it would be this one-to-one negotiation about how much land you would, do you need help with aggregation, how to make that possible. So it was much more sort of savvy about how market conditions were. but there were definitely certain preferred partners. And that preferred partner story is true for both the cities. It's just that how they approached them. Like I said, that there were flexible negotiations in case of Hyderabad. For example, Hyderabad, I mean, though it's like became the IT capital of the city, their IT policy remained in the draft stage, one of the longest in the country. They were one of the last states to actually make it a notified IT policy. And again, like a lot of conjectures were made that as long as it's draft policy, it allows greater negotiations versus, but that's again something that's just, I mean, that's not something that I could research, so I didn't. In case of Kolkata, it was more in terms of discretionary quotas that were made available to certain private players out of the land that was acquired, especially in sort of the new town area. So Kolkata has an interesting history where there are, like I said, there was Sector 5 where the IT sector first came in, then they expanded it to Newtown and then finally to Rajarhat. And in Newtown, the entire land was acquired by HIDCO. HIDCO was a private corporation that was set up with government role in it for this process. And the prices that the land in HIDCO, that HIDCO put, which was about 40 lakhs an acre, which at that time was argued to be one of the highest markups in Asia, like the difference between the price at which land had been acquired and the price at which they were selling, and there were no takers for it. When they failed in that experiment, when they tried their experiment to sort of capture this unearned income about a certain urban future that they imagined would come in this area, failed, then this whole area of Rajarhat was opened up in a very laissez-faire. I mean, that's actually the word that they use in their policy, that it's laissez-faire, anybody can do whatever there is. A new development authority was established for that area, so it was a development area, it was designated a development area. But Rajarhat Bhangur Authority, which was set up as a part of that process, was in many ways very notional. Had about 3 people manning the authority at the time. So anyway, so this is sort of looking at, so what I'm going to do now is look at land value as a lens to understand the transformations that happened, and I'm sort of dividing this up into sort of 3 ways of looking at it, 3 ways of approaching the land value dynamics that played out. So the first is the value created through infrastructure and placemaking initiatives. The second is this idea of how both public players, public agencies, and private players were involved with territorializing in terms of new ideas and imaginations of what an urban future could be. And there was a value flattening that was involved, and I'll talk about what I mean by this, that flattening of what is the value that you can get out of a large extent of land, and the idea of long-term value capture sort of comes in here. And the third thing that I'm going to talk about is how value is linked to dynamics of vulnerability and volatility. And in this case, these terms refer to not just financial business cycles, but also longer economic cycles, social and ecological concerns as well. So firstly, infrastructure and placemaking. So I already talked a little bit briefly. Remember I said that there's a whole politics around how this area was designated. So in the first basic development plan that was created for the city, the eastern side of the city was completely left out of the development trajectory. It couldn't be developed, it was wetlands, can't be taken off for development. However, over time Salt Lake City did come up, again very clearly a Chief Minister driven project. And those sort of ideas that here is this land that's waiting to be developed, and especially when the Eastern Metropolitan Bypass was created to the eastern side of the city, which connected the main city to the airport, this land just sort of became very, very attractive to people. So then there's a whole set of politics, which I'm not going to go into right now, about how this East Kolkata wetlands was designated, how the boundary was designated. And there was a lot of citizen mobilization, DFID was involved in this project, but creating this kind of a clear demarcation that the wetlands ends here and this area beyond that can then become open to development. So the two stories are really linked, but I'm going to focus on the Rajarhat story right now. But in effect, a lot of this area that was out of the inside the Rajarhat area, you can still see they are wetlands. They are peripheries, there are fisheries. And what this also means is that it plays a lot of roles. It fulfills a lot of city level functions. So the first thing is in terms of the city waste disposal. Kolkata is one of the few cities in the world which doesn't have a city level infrastructure for sewage. This thing, it has been documented widely. The wetlands area, the sewage is sort of left in. It automatically cleans the sewage by the time it reaches the Bay Area because of its biology. I mean, I'm not a biologist, but I had conversations with various people who are involved in that work. It's also a very important part of the flood control mechanism for the city. It's an incredibly fertile land. There were 5 crop rotations which were supported in this area, which basically meant that at least the landowner component of the people who were living there didn't actually fit into the classical definitions of the urban poor, even though they were not actually connected to the urban cash economy. Like they had a certain quality of life, but they did not transact in money necessarily because it was a different flow of cash and capital that worked out in those areas. About 20 to 25% of the city's food is grown in this area. It comes from this particular area. Which also basically what that means is that when land acquisition was suggested in this area, there was a huge amount of protest and reluctance to kind of go with this project, because even though people there were not necessarily rich, and there's a whole other history of this being a place where a lot of Bangladesh refugees that came from Bangladesh were located. There are several hierarchies of tenure that plays out in this area, land ownerships. There's about 300,000 people who were affected through this project, but they fall into these different tenure categories, including Bargadars, etc. I'm not going into all of that, but basically what that meant is that there was a huge amount of opposition when this project was pushed through. And compensation amount became a point of conflict. From the official side, a lot of the conversations basically said that 36,000 was paid, per acre for this thing, which at the time was one of the highest compensation rates paid in the country. And so it was a question that we are not actually exploiting this population. We are acknowledging the fact that there is this is a highly fertile piece of land. It has a lot of potential, and therefore we are compensating. And the people were also actually, a lot of them were happy when they first initially got the compensation amounts. There was, a lot of people that I kind of spoke to during my field work, not everybody was unhappy. People were actually quite happy because there were also motorcycles given, and various kinds of other compensatory gifts were given as part of that. But what happened over a longer period of time was that these were families that didn't actually survive on using cash to buy from, buying food, for example. They grew their food. So buying food on a daily basis, or not knowing, for example, that everything cannot be spent on televisions and VCRs, immediately, like overnight, like a lot of very large purchases were made by the family, and the amount ran out. And then sort of a lot of the disaffection started setting in more closely, where it was like, oh, at that time we thought it was fine, but now it's not, because now the money is over. Now we have to go to work. We don't know any other kind of work. Skill levels being very different. And the story around Rajarhat also changed, because when it first was proposed, it was going to be an industrial township. There was going to be industries, and there was, during the land acquisition, there was all this talk that at least one member from every family that was affected was going to be given a job inside Rajarhat area. Over time, the state strategy also changed, and from industrial nodes, they became IT nodes. And then there's an absolute jump. A lot of the people who are going to be displaced cannot be absorbed into the IT sector, because we just talked about a completely different skill level. So that also sort of played out in terms of how the disaffection grew over time. Hyderabad's story is slightly different. Hyderabad, again, it's a water story again. Hyderabad, this was a kind of a low return agriculture in a lot of the areas, and most people were very happy to just give up their land and take another profession because the land was not giving them the kind of returns that were there in Kolkata. So financial displacement was much easier in Hyderabad. However, there was an implication because what this low return agriculture had really done was sustain a very low cost water recharge system for the city. And as these land parcels shifted from agriculture to basically passive real estate, these systems started falling to disuse, and that eventually came home to Hyderabad when they faced a massive drought situation in 1999-2000, and a whole set of strategies were being considered, including using the water from Hussain Sagar for drinking purposes, or bringing in water from dam projects, etc. Eventually, those conversations ended up as this project called Niru Miru, which was water and you, which was sort of this idea that again the water recharge system needs to be rebuilt and sort of revitalized because it's affecting the whole city's hydrology. But a lot of that Niru Miru happened through private contractors rather than the the owners and farmers, etc., who had been involved in the agriculture. And there's a lot of critique about like what happened with that kind of private contracting of Niru Miru. But anyway, so it's kind of this circle of like how even low return agriculture was actually had a very strong, was fulfilling a strong city function, which got priced out with this financial displacement that happened. So these all play into how do you sort of value land, in terms of the placemaking. The other part of it is that how this placemaking was done. Talked about some of the things there already, that the land access transportation networks are very important to this. There were various kinds of new projects, new kind of statutory zoning that came in. There was also a new sort of a planning and development regime that was put in place in a lot of these places. New authorities were created. Hyderabad had the Cyberabad Development Authority, the Hyderabad Airport Development Authority. Kolkata had HIDCO, which was, like I said, a private liability firm, going all the way up till BRADA, which was Bangalore Rajarhat Area Development Authority, which, like I said, was a notional thing. There were lots of, again, Kolkata story where when they formed the public-private partnerships with those 13 developers to begin with, they also unofficially, in many ways, became advisors to the government of how do you go forward and bring in other investors. And so some of it is formal, some of it is things that are not talked about, but people in Kolkata know this incredibly well about who was sitting on various meetings, etc. Complete different modality of marketing, road shows, investor meets, which we've made very normal now. This is this thing that I'm talking about, that territorialization and value flattening. So now I'm just going to explain what I mean by that. So there was these two different methodologies used for land valuation. This is methods of valuation themselves. So when compensation amounts were established or determined, usually the method used was sales comparables method, right? So in which like what is the transaction value, prices of various land that is being transacted in that area, and comparing to that. Now the critique here is that a sales comparables method in a market where there isn't a market to begin with, right? So it's like, what are you comparing it to? It is, in many cases, those few instances of either people who absolutely need money on a short-term basis. It is not including the kinds of transactions that's happening between family members or friends. And like I said, that this is not, it wasn't tied into a cash economy necessarily, this area. So a lot of the circuits of land transaction were really tied into when a family would have a bad year, they would, quote unquote, sell their land to friends and families for an accepted rate. And there was social, I'm not saying that they were perfect, but there were certain checks and balances about who can you sell it to, how much can you sell it for, and in the years when it was flush, then they would buy the land back. Right? So these values that actually happen in terms of transactions don't actually reflect the use value that is associated with it, because there's a different logic to those transactions. What this is essentially what the sales comparables. The other thing is the sales comparables method is looking at land as a consumption good rather than land as a production good. Production good would have land values associated with the rents that are being generated from that particular parcel of land. Consumption good would be buying a piece of land for a residential project or something where it is that you're going to use it. So it's a consumption rather than you're using it for some particular use. So there's an absolute difference between those two. And using a comparables method basically flattens the geography of what are the actually productive uses that are being played out right now. There were other things that happened. Land was declared fallow during, this was a IIT report. That was the first report that was done on Rajarhat before the acquisition was done, where they declared the land to be fallow rather than used for agricultural purposes. Only agricultural land was aggregated during acquisition. There were very different kinds of norms that are associated with how much do you need to compensate if it's a residential property versus agricultural land. Agricultural land rates are lower than residential lands. There's also very specific estimates that are associated, like the official report about project affected populations highlighted that 200 households had been displaced in terms of how many houses were displaced. Now that was by any estimate, a very low estimate of what had gone in. The CAG after that did a whole report on this thing, and they said that only 17% of even the project affected families were actually rehabilitated as well. So there are sort of cycles within that. That is not just about the method itself, it was also these various issues. And comparables method also means that things like the lack of urban infrastructure, the lack of a periurban cash economy starts to play a role. So the irrigation infrastructure, for example, that was there in that area, Department of Agriculture rents that were being collected in that area, those were not part of the comparables method. So that's one way of flattening geography. Like I already said, that there was an intent of value capture, so buy at this level, but assume that the values are going to go up in the future, but capture that value in today's terms. And so Newtown had some of the highest, arguably some of the highest markups in land prices in Asia under these authorities. The other part of the valuation method, which is another way of flattening the geography, is how valuation was done when public-private structuring was being done in various projects. In that case, the method used was discounted cash flow, and in very basic terms, you're talking about what profile of development is going to come up in a particular area. You figure out that, say it's a commercial building, it's a residential thing, what are the rents or what are the sales revenues that you're going to generate over the project period, say for the next 20 years or 25 years. You bring that value back into net present value terms in terms of what is the project cost right now by allowing for inflation that will happen during that time. And then that becomes your net present value of the project, and that is the value which you can use to take out loans, or you can bring in an equity partner. Right? So what that essentially means, if you think about this process of valuation, is that it is defining the development profile of very large areas. These are thousands of acres of land. You're determining what the development profile is going to be for the next 20 to 30 years, what the rents are going to be from that development for the next 20 to 30 years, and then bringing that forward into the present, which means that you're structuring the cycles of debt and the spatial development that will happen in 20 or 30 years. You have to develop according to that profile. You have to make the kind of returns that were projected at the start of the project to be able to make that project financially feasible. Right? So that is again another kind of a flattening of geography. It does not allow development dynamics to emerge in a city in the way that it will, which ties in with how a city develops. It goes through booms, it goes through busts. There are different kinds of users. But what this does is that for a large areas, you're determining what's going to happen there for the next 20 or 30 years. And the government is also, in these PPP structurings, the government is taking on part of that debt risk. It is guaranteeing that we are going to stand by our private partner to make sure that this development happens in this particular way, because we are invested in it as well over the next 20 or 30 years. This is a very specific issue, and this is playing out in lots of different ways. It's playing out in a lot of like larger policy, city level policies, national Amrut and all, smart cities, etc. in different ways. This idea of spatial and debt structuring cycles being put into place. Another way to think about value is how real estate financing modalities have changed over time. And this shift is very important, because one of the ways that a lot of initial financing happened was through end user financing, self-financed housing, SFS housing, which you might have heard about in a lot of different places. What that means is that the end users themselves are putting in equity. So there's a relationship between what is the actual end user demand in the market and what is being produced. So end users pay up in every project stage, and that means how much construction or development is going to happen. So this is a kind of financing that is very close, that makes the project very close to end user demand. This is the next level of separation, which is debt financing, where land acts as collateral, which is public debt. This is also not very high on the risk thing, because before any institutional financing is given out, there are many checks and balances put in place. The NPA story, of course, tells that maybe there need to be more checks and balances put in place in terms of establishing how debt is given out. And yet, this is again another place where there are certain levels of controls that are in place. There's a regulatory climate that is associated with this. What we are moving in now, and the interest has been growing in this area, is in terms of real estate funds, which is private equity, which is that investors taking a long-term view in terms of the real estate market over a longer period of time. And this is where it might be in a particular project, it might simply be a normal public-private structuring, but it might also become part of portfolio strategies. So here you have a whole range of incentives or imperatives playing out, and not all of them well regulated. This was another thing that was sort of started but didn't go very far, real estate mutual funds, which is again end users, or not end users, but retail investors. That's people like you and me putting in money, smaller amount. These are very big, these are very large. The private equity players will be very large amounts of investment being put in. Public equity is smaller investors, including high net worth individuals as well. But these will be smaller packets of money being put in as a part of a larger project through a mutual fund sort of a thing. This hasn't really done very well in India, because it's a high risk sector, which private equity can weather over a longer time, but harder for the public to take. And this is a new area, which I'm sure everybody has heard about. We're now stepping into real estate investment trusts, and this still has to play out, so not much that I can say right now in terms of what forms it will take. But real estate investment trusts were a very big part of the East Asian financial crisis. Not that it has to happen in that particular way, but this is a very tricky area to start going into it. There's a whole set of regulatory issues that are associated there. Finally, the question of value in terms of how it's linked to vulnerability and volatility. So one of the things that becomes very clear in this is that when there's a change of use associated here, the kinds of changes that are coming up have very little or very low kinds of metabolic connections to the city. Like what was happening in Kolkata's periphery was supplying food, water, waste disposal, energy things. So there are these connections. So it's this sort of alive system between the urban and peri-urban areas as compared to some of these new developments that's coming up. Same thing with Hyderabad in terms of the water recharge story. There's also volatility and vulnerability in terms of how the real estate market dynamics played out, and the land market and built-up markets were very different, and I'll talk about that in a little bit. And finally, what I said, that state guarantees played an absolutely critical and significant role in sort of bolstering up values in these particular places. So this is the land supply The land versus built up market in the two cities were it's fascinating to think about it, because land was something where the state government was very closely involved, and like I said, that a lot of that, the one-on-one negotiations or the quota system talked about preferred partners. And in this, even if you sort of consolidate the amount of land that was with, these preferred partners, the consolidation exceeds the end user appetite in those markets by several, there's a huge scale difference between the two, which means that even though there was no regulatory barrier against small and medium scale players in the land market, essentially the small and medium scale players went through several iterations. I mean, generational wealth was made and lost in the various real estate cycles that played out, but effectively they were competing against certain players who had a monopoly role in terms of what access to land supply they had and at what prices. So it was really not even sort of terrain. It was a very uneven terrain of competition between larger players and small and medium scale players. Land prices also, because of this sort of, from small scale players to large players, has this huge diversity that it also saw very sharp corrections in the market. So every time the government changed, or the outer ring road is a very interesting story. In 1 year, they changed the alignment about 112 times. And every time they changed the alignment, the prices around the area would just, completely be volatile. So every shift that happened. So land was something that was very sensitive to changes, but land was but sensitive to certain players versus other players. So there's this kind of absolute differences between the scale of the players. By comparison, built up is actually a very small component of the market that's playing out in these areas. Only a smaller part of this land that was consolidated actually went into the development and construction, went in for development and construction. A lot of that supply was on the high end, and construction activities was often really slow, or when the crisis happened, or when the CPIM government went out of power, etc. There were times when there was absolutely no construction activity happening. However, the prices did not correct. Despite the slow construction activity, despite the fact that it's a very small end of the market, the prices did not come down. The entry barrier, not related, but in Bangalore there was a very great example of a housing project where they said that I think the price was some 60 or 70 lakhs for an apartment, and they were not getting any buyers for it. So they said buy one, get one free, but they wouldn't bring down the entry barrier from 60 to 70 lakhs. But because if you can afford a 60 or 70 lakh house, then you fall into a certain income category. If you get a second one, that's fine. But if you bring it down to 30, that's a completely different income bracket entirely. So, I mean, this is just a colloquial example, but there are definitely a lot of colloquial examples like this about how prices in built-up markets did not show the same volatility as the land prices. There was also no liquidity in the market, which meant that once people had bought houses in those markets, there was no secondary market. They could not sell that house at that same rate to anyone else, which basically meant that there's no liquidity. They had to hold on to it. And this is mostly because the built-up market really absorbed the markups that were happening. And a lot of overseas marketing, a lot of the houses are being sold elsewhere, not necessarily in Kolkata. This is kind of the last thing. I've kind of talked about most of this stuff, that the state played a strong role in sort of padding the demand that was there. So there's a significant role in terms of how the land market was structured. The state government played a big role for it. It also meant that because there was so much of land, they had to guarantee a lot, provide either explicit or implicit guarantees of allowing a certain development profile over a longer period of time. And both state governments are very strongly implicated in land market volatility. So for example, when the CPIM government went out of power and Trinamool Congress came into power, BRADA was, the Bangalore Rajarhat Development Authority was dismantled. With the dismantling of that authority, the prices just dropped overnight, which basically was a reflection of how much of those prices had been bolstered up by the presence of an authority, of a state guarantee that they are part of this development process. I gave you the ORR alignment story already, but again, that's a state role in terms of how values are changing. Both markets experience a collapse is going up. I was actually looking this morning, there's been an increase of 5 to 10% in prices in a lot of these markets now between 2009 and 2016. So obviously those dynamics are playing out different ways, except I don't know exactly what forms they're taking. So I'm going to end with this. What all of this is basically leading to is that here is, I mean, it gives an analytical frame to understand why different stakeholders and actors, their actions. So a lot of this narrative discourse is like very fundamental to it, because it was about, you know, this future, urban futures that were playing out. So it wasn't necessarily about whether they believed it or not, but whether they believed that it would come true, but whether they believed that they could make it come true, and which collaborations they needed to get into to make it come true. So it is very much a project of hope in that sort of sense, not necessarily an optimality discussion in the here and now in present terms. The other aspect is that there is, like I said, a very shifting power terrain between public and private, as well as within the public. Like for example, in Kolkata, different government agencies simply did not agree that this is the future for the city. And so pushing forward Newtown or pushing forward Rajarhat came under conflicts between departments, Department of Agriculture versus Department of IT, like there were interdepartmental fights that were playing out, versus like Hyderabad, where because the CM was behind the project, things moved through a lot more smoothly. So these placemaking practices also played out in terms of these different relationships, not just against public-private, but within the government agencies as well. And finally, like I said, the implications of state guarantee in terms of spatial and debt structuring cycles that are being put in place inside the city. So I'm going to end there. Thank you. If you have any questions.
Basically, this will boil down to a supply and demand system after a while. Right now, the builders are holding on. Do you foresee in the near term this demand and supply thing coming into effect? Will they lower the prices for the inventory that they're holding?
I would say that it's actually not a supply-demand kind of a dynamic at all in both the cities.
No, I'm talking of all over India. I mean, since you've done this study it's almost the same all over, a little difference.
So that's the thing, because the word demand, we almost always assume that it's going to be end-user demand, and end-user demand which is located or anchored in particular locations. Which, I mean, and the reason I say that is because what are the income levels? What are the production? What are the sources of jobs inside a city? And that means that there are certain income levels inside the city. And so some sort of a relevance between the income levels and the kind of end user demand and their price levels and affordability levels. Like those are some of the assumptions that are associated when we use the word demand. But actually what this really highlighted was that firstly, a lot of the demand is actually coming from outside the city. It might come from people who are not even in the country. So there's definitely segments of demand which have nothing to do with the urban economy in its present terms. There's also a whole set of demand that's being generated when investors are involved in either equity leverage, where they're just bringing in private capital, which can have a whole set of other logics, or in terms of a portfolio strategy, where it is about holding on to land. So there's just a whole set of other dynamics that's establishing the demand, and only a small subsection of that is the end user demand. That end user demand is likely to go through cycles of correction. So the 2008, 2009 did lead to certain corrections, especially in the land market, if not in the built up market. But it is a small subsection. So to understand the larger real estate dynamics of all these places, of all these localities, it's more important to sort of look at the larger financial cycles in which they are associated, rather than just demand in the end user sense of the word.
You're talking of a niche, 2 or 3 segments which are there, but the larger millions of Indians looking for a built-up area. So the niche ones are there, but I would volunteer to say that they are a small segment.
No, fair enough. So what I'm sort of saying is that it's not that end user demand is not there, it's huge. It's just that how responsive or how sensitive is the market, especially in the peripheries. Right now I'm not talking about the main city area at all. I think a lot of things that you're talking about will play out in very different ways inside the main city area, where there isn't established markets. These are places where the market is being established. It's a nascent market. And in those areas, the kinds of real estate dynamics that are emerging are not that sensitive to end user demand, is what I'm getting at. So you're asking the question from the end user perspective, that here are all the people who need to have access to land and to build up housing. And I think those pressures will come from elsewhere, maybe in terms of housing finance, or in terms of specific policies, or housing schemes that come up from the government. But what I'm really describing is the real estate dynamics of peripheries in larger Indian cities. And there is a disconnect between those two. Yeah.
Your simplified description of Hyderabad was hype but hide.
Yeah.
I wanted to know why you use the term hide, and a follow-up also is that in the case of Hyderabad, there's also a question of the Kamma caste and how, because you mentioned the Bangladeshi refugee population and their land tenure slightly in the Kolkata example. I would just like to know,
Sure.
in parallel, how that played out.
So the hype and hide is actually not my terminology. There's a paper by Muij, 2003, where this argument is developed. And what it basically refers to is that there was a lot of sort of media space taken up in terms of new names, especially very iconic brand name, corporates, etc., who were coming in. So there will be a huge splash, there would be press releases, etc., etc. And so that was the hype part of it. But then when it went into the negotiation stage, there was hardly any reporting of what was getting done until it would sort of go into a final stage. And so the Muij sort of traces various examples of this in the paper, and sort of says that then it's this sort of hype and hide sort of back and forth that was happening with a lot of these projects. You're absolutely right. I didn't go into that history, but it's absolutely shaped by that. So Hyderabad's periphery real estate market really started taking off with, the Kammas kind of trying to find a place for their surplus agricultural revenue and finding a place for it. Hyderabad is also a very unique place where, because of what happened with our partition, India, Pakistan, a lot of the ruling elite which was there in Hyderabad, which was a Muslim ruling elite, left. And so it left a vacuum. And so, the formation of TDP with its sort of political base in the Kammas also meant that people were coming from elsewhere and investing in land and creating a place for themselves. So that process was going on, story with the film industry, etc. also. But this process really started in the 80s. So what we're seeing, what I'm talking about now in the 90s and 2000s, is the continuation of that process rather than it being triggered by what was happening. So it's sort of accentuated, but that periphery change had started before, which also kind of plays into what is the political regionalism, what forms did it take, and the land investments were a part of it in that sense.
You say something about Shingur, the fallout in Shingur, what happened?
So Singur is interesting because it became a big media story. It wasn't actually the first time that these land politics questions had been raised. So Rajarhat is a great example of that. Many of the same issues that eventually became a political platform in Singur had played out in Rajarhat, and yet it was not covered in the same way. Even right next door in Kolkata, most of the English newspapers did not carry anything about what was going on in Rajarhat. The discussions, there was a lot of sort of back and forth between Trinamool Congress and CPIM in terms of what this was going on, but it was not as politically huge as it became in Singur and Nandigram. Local state elections were set up, and certain, I'm not taking any names or whatever right now, but like various people were sort of involved, and they were involved across party lines. The difference between Trinamool Congress and CPIM was sometimes very hard to see on the ground in case of Rajarhat. So yes, Singur did have a very strong discursive footprint in terms of bringing a lot of questions around land acquisition into the media. People were discussing it. It became quite the trigger point, but it wasn't the first time. Played out in these areas as well.
Hey. Yeah, thank you for that. So you mentioned that a lot of these processes that you talked about are now being normalized. And I'm kind of wondering that along with this process of normalization, if you see a sort of transition where these processes are playing out at much bigger scales. So for instance, can you see, instead of these processes playing out at, neighborhood or street or, peri-urban areas, you're actually seeing a transition to, where you're building entire new cities. And, can you, for instance, think of the new Andhra Pradesh capital project as as the same process playing out in the periphery of a region as opposed to the periphery of a city?
I don't want to sort of say that it is the same process playing out necessarily, because I haven't necessarily done research in those areas. My intuition is that there will definitely be certain processes where it will be possible to find a parallel. But what was interesting, I think there is still something quite unique about what happened in the peripheries of these cities, is because it had to tie in so closely to the city's social and economic histories, and who was there and who was investing and who had the money and what did they want, what partnership modalities were they looking for. The Khamas and their landed interests in Hyderabad, the public-private partnerships, in Kolkata, they have a very strong imprint in what happened in the peripheries. And I imagine that if there is a new area that's opened up, it's not that political and economic and social constituencies from elsewhere are not brought to bear on those, and AP Capital is a great example of how those dynamics are probably shaping up even now. But it is a story of where those coalitions have to be built. You have to make these coalitions invest in a new area where they may or may not have a history. So I think in that sense, it would be kind of different in terms of the historical trajectories of these two kinds of places. Any other? Yeah.
Most of the accommodations built areas now built, if you go around India, you could correct me because you're doing this research, one would see a lot of peripheral areas being built up.
Yeah.
And the inventory they're holding on to are also in the periphery, which is comparatively cheaper. You see this photograph is typical of all over India. The crane is stopped, there is no work. All over India, all the cities. So would it be right to suggest that the market correction is not taking place because it's not in the white economy. All this is in the black economy. And there is no requirement of correction because in any case, it's undeclared and you can't enforce anything.
How, I'm going to ask you a question in return, like whether it's white or black, a transaction has already taken place. So the actual construction and the development of a housing unit, once a transaction has taken place, would fall into a different regulatory setup anyways. Like the negotiating power that you might have because you're paying certain amount in black. I'm not saying that the black economy does not play a big role in what has happened in these peripheries, but not necessarily in the built up supply.
I'm saying the transaction has not taken place, and the reason for that, for example, in any other commodity,
So
if you hoarded anything, if you hoarded onions or vegetables or any other thing, there would be a problem and people would write about it and a lot of things would happen. But in this case, firstly, there is inventory being hoarded. Secondly, there is no transaction taking place.
So, I mean, so let me just put it this way. So, you're right that land and built up real estate is not a consumption good in the same way that a lot of other things are consumption goods. It's also an asset in its own terms. It's an investment asset which is comparable perhaps only to a few other assets like gold, where it has a long term, it doesn't need to have a market and a short term market for a value increase. So in that sense, I agree with you with what you're saying, that because it's not a, sort of a consumption good in that sense, there are other dynamics that are coming into play. But what's happening with the black economy is really very hard to research as well. And so I don't think it would be fair for me to make a commentary about something that it's very hard to pin down. It's very hard to do research to find the data to sort of say that this is how it's playing out. We can conjecture about its role. And it's definitely played a role in terms of how a lot of domestic private equity has come into this market, because there is a question of leverage between the white and black economy. But that is a lot of it is from the developer's side. What role it's playing in the end user side, like this research really did not enter that question. So
If there was debt financing or if there's equity, the corrections would have to take place because the lenders would be getting after the people, the developers. Because there is no clear, let's say, white transaction, that is the reason why I suggested
sure.
that.
I mean,
If there is maybe one question, or we can wrap up now. No? All right. Thank you so much for coming out again. Thanks to
Thank
Sudeshna
you.
for taking time to speak with us. As always, please stay connected on social media. That's where all our announcements are. And thank you.